if you think about it, one reason we're so excited about this whole project around trade finance is when you actually consider what it is, the ICC, which is the world's largest business organization. The reality, of course, these days is more than 2/3 of the ICC's constituency is actually based in developing and emerging economies. And whilst we feel the trade finance crunch hard in a lot of developed economies, we see it live in developing and emerging economies. And I'm actually in LATAM in about 10 days' time discussing this very issue. Because what we do is we seek to grow the global economy, we seek to advance trade and revitalize trade and advance sustainability, all the elements we've been talking about today, which is actually why we care about trade finance so much. So at the outset, I'd like to express particular thanks to the Asia Global Institute for their partnership in hosting today's event. I think it's very exciting that we can actually work together. I look forward to other opportunities to participate. And of course, we're blessed with the energy and excitement of Dr. Victor Fung introductory comments. It's always great to have Victor. Victor has been a stalwart, but more importantly, a driving force of the ICC. And as the current Secretary General, in many respects, it's Victor's prodding that keeps pushing me along. So I really thank you for that, Victor, and your participation. And Eddie, we haven't met before, but I've had the pleasure of dealing with a number of monetary authority guys around the world. I look forward to the opportunity to engaging with you because I really appreciate the way the Hong Kong authority is seeking to do not just the regulatory side, but actually innovate and create platforms. It's very important that you do so. So it's actually really important that this discussion goes on. And also the panel that's just spoken was a bit of a masterclass, I think, on framing up trade finance and what we need to do, and particularly the report that we've had from which we worked on with McKinsey. Just in the little bit of time I've actually got, in a way, I want to reiterate some of the themes that have been bouncing around. One is just on the broader economic context. I won't take long on that. But the issue of digitalisation and the importance and relevance of that Natalie's, I think, quite brilliantly intervened on before. And that third piece, and I want to talk a little bit about this, about sustainability, about getting that right, because there's risks if we don't. And I don't want to spend a lot of time on risks, but I think we should just dwell on them a little bit. And I think just looking at the economic context, I think we all know that trade will be a vital source of relief for many small businesses whose balance sheets have been severely impaired by the pandemic. But as relatively recent history shows us, we can't take the supply of cost-effective trade finance to fuel the SME recovery for granted. That's why it's really important that we've engaged in this process and the advocacy from the group we put together with the ICC, led by Victor and Marcus. We know that today's trade finance ecosystem is actually remarkably sensitive to economic shocks, and there's no predicting how it will respond to some of the long tail risks that the pandemic has created. And I think we all know we're not out of this pandemic yet. I don't know those of you who sit in Hong Kong, you know that, you feel that. I was just in Singapore, and despite the best endeavours of the government there, there are still significant implications of living with COVID and trying to manage it. And as Andrew said in one of his comments before, when you look at what the IMF has said about the risks at the moment, the downward pressure on opportunities for the global economy, we also look at what the World Bank is talking about with the growing risk of disorderly sovereign defaults in emerging markets. And we add to that the risk of credit conditions tightening as central banks drive up base rates to curb inflationary pressures. So these are negative aspects, negative sort of cross currents that will actually affect the provision of trade finance and its availability and its pricing. So it's really important that we set the foundations for a strong and inclusive post-pandemic recovery, understanding it's got to include the strengthening of the ecosystem for trade finance, because as some of the numbers already revealed today, the importance of the real economy, the importance of SMEs, and the critical nature of trade finance to fund those SMEs and support them is here. So our view, and the reason we're so keen to be involved in this process and lead this process, is that we don't think waiting and hoping for the best is an option. We don't think it's a good strategy. We actually think we need to step up and push along. I want to talk a little bit about digitalisation, and I think this is one of the issues that troubles us greatly. It's the risk of slip back. And I think Natalie talked about this a little bit, and I think Victor, in your comments as well. What we saw during the course of the pandemic, particularly its most critical phases, and as I said, we're not through this yet, was the amazing number of advances we saw on the front of actually access and utilisation of digitization, but we can't take that for granted. Because we've actually seen through this that trade's reliance on paper-based processes is one of its biggest sources of fragility. And Natalie said that, actually, if you think about it, the risk that leads to human-based error, etc., because of the dominance of paper there, which is one reason we push so hard on digitization of trade to try and ease this. But we love the fact, and this is something we encouraged and we enabled it where we could, working with WCO, working with WTO, working with businesses, working with regional bodies, the fact that businesses and governments took such remarkable steps through the early days of the pandemic to digitalize processes, to keep trade flowing at a time when many so-called experts said the global commerce would likely grind to a halt. But it's vital that we don't lose those gains. And we've already seen some customs agencies, for example, removing some of the emergency trade facilitation measures which enable that. From advanced electronic information systems to paperless trade processes, we don't want to lose that. We actually had that through those emergency measures, and we're arguing now to keep that going. We don't want to go back to the old analog ways of doing business, because that is actually not going to take us forward. So let's move forward on that. And I believe it's really incumbent on all of us to ensure a concerted effort to drive forward on digitalization. And that's actually, I think, the wish list or the Christmas, what we want for Christmas to announce it at the end of December 2022. And I think that will meet the desires of many around here. So let's get those numbers up. Let's get the focus on the inter-trial processes and what's happening with UNSCAP as well. And yesterday I spent some time with the new Director General, Rebecca Grisman at the UNSCAP. Rebecca's great because she actually wants to work with the private sector. And so we're now putting together a pathway which we'll agree about how we all work together, because what we've said before in this discussion is we need to get some of these frameworks, which are great, actually adopted. And as with UNCITRAL, that's why we're working so closely with UNCITRAL through our processes to do the same thing. Look, I did mention this issue of sustainability, and I want to put it in a slightly different context than we've talked about today. I think it's fair to say that there is little prospect of the groundswell of investor and civil society pressure around sustainable finance receding in the years ahead. I think we're going to see more pressure on that. And it's a trend, and this I think really goes to the heart of why it's really critical around trade finance, that it's a trend from which trade financing cannot expect to be immune. We know firsthand from our own work in this field, this is what the ICC does hand to hand and on the ground, that defining sustainability criteria and metrics for trade is a lot more difficult than for other asset classes, such as for corporate bonds. And the observation we made, which is why we got involved, was that inaction risks leaving trade open to stinging critiques about its negative impact on people on the planet. What we don't want is a rehash of the 1990s anti-globalization movement in many respects, perhaps, but with potentially much greater political potency in the current climate, if trade finance is not aligned with sustainability. And as Andrew said, I think everyone accepts the macros about why all this is good, and we certainly do. But the lesson we did not learn, and frankly, the classic, the Davos crowd continues to fail to understand, is that talking about things continually at the macro without understanding the micro implications means that good little people get hurt and they don't want to play the game. So that's why it's so important for us to focus on the micro issues about how do we incentivize? How do we help? How do we create the capability? I mean, the ICC, we've actually created digital tools to enable that, to help banks actually live up to their net zero commitments, but importantly, do it in a way that doesn't hurt SMEs, but actually helps SMEs who want to get involved. So we accept the macros. What we actually want to do is deliver on the ground, and that's a micro discussion. That's really where the groupings around this discussion today is so important. The players from the banks, the players from government, the players from regional development banks, etc., critical. But ultimately, chambers of commerce and people who have direct access to SMEs, and actually providing tools which can be readily usable, which is why we've created, we call it ICC SME 360X, by the way, if you want to Google it and have a look at the website. But that's got to happen. We cannot allow this debate to be hijacked and turned into a debate akin to the anti-globalization movement. It'll have very negative consequences, I think, for all of our constituencies. But while I pointed to risk factors, I don't want to finish on a downbeat, I want to finish on an upbeat. Because I think what we heard today and what we see with the report is that we have within our reach an ecosystem that can finally deliver on the promise of digital technologies to fully democratize trade, a term that's used a lot, but actually, again, what we're doing is coming up with how you actually get that done. And I firmly believe that we can capitalize on the potential environmental, social, and economic gains that this will bring. But the key word, and it's one that Dr. Victor Fung said up front, and I keep on pushing, it's action. I think we're all saying that as well. We actually want to have measurable outcomes on this. It's why we need to keep pushing forward, because our biggest enemy here is actually inertia, which is actually the biggest enemy of global progress. It's the inertia that holds back the way the global international institutions have actually failed to adapt themselves to the context in which we operate. It's just inertia. Life is too easy as it is, even though it's not working properly, it's kind of comfortable. We don't believe that's right, because it's that kind of attitude that will stop us moving forward on trade finance. So action is really important for us. And that's why to actually galvanize action, you've got to have a compelling vision. And I think when you have an opportunity to look at the report, but actually have your opportunity to think about the consequences of us achieving this vision, the democratization of access to trade finance, the way in which it will spur economic growth, help communities build prospects and opportunities for people in communities, and actually bridge a number of these gaps. This is a compelling vision, a reason to get on board, a reason to be motivated to act. And it will require action from all of us, from large corporates, regional development banks, smallest and micro enterprises, from financial institutions to public institutions. But as Andrew says, maybe we'll just have to get a sexier title for this team trade finance, but that's not a bad one. The team trade finance to deliver is really what we want to do. So I'm deeply committed to ensuring that the ICC is at the forefront of this charge. It's like, it's why we're here. It's what we do. We grow the economy, we revitalize trade, we advance sustainability. And I think what we've already seen since the publication of the ATF report last November, that we've already started to accelerate our work under our digital standards initiative that Andrew talked about, defining common data models and APIs for trade financing. We're also working to enable industry convergence across value chains around standardized digital documents. We've published the first beta framework that Andrew talked about before in terms of helping banks and corporates gauge sustainable profile of their trade transactions. And we'll shortly be launching, and I'll be in Ecuador in about 10 days' time, to launch an innovative new trade finance platform in Ecuador and then in Mexico as part of our Trade Now program. You know, we do global policy, we do policy influence, we do standards, but we do stuff on the ground, particularly when there's market failures or the market needs to be pushed, and we will get involved at that level as well. It's the power and the beauty of the ICC, I suppose. And we recognize that one of the opportunities here is to connect you all up with what we're doing. I'm really glad that we have so many people from Thailand participating in this. Thailand is playing a very important role this year as chair of APEC. I'm very proud that the chair of the in Thailand is chairing the APEC Business Advisory Council. I intended to be in Bangkok a couple of weeks ago, but with navigating COVID restrictions is tricky. But my aim is to be there at the end of March in April, and I hope to see a number of my friends in Bangkok at that time, but to talk more about this. Because as we said before, the critical pathway here is G20 engagement. I've just become the co-chair of finance and infrastructure in the G20, B20 process. We'll be pushing that there. We're pushing this at the G7. We're pushing this then at APEC. We're pushing this in the Latin American regional groups. We're pushing this in Africa. We're pushing this in the Middle East. Our aim is to deliver those Christmas gifts under the Christmas tree that we want, which is real advance. So thank you very much. And I hope you will see us as your trusted partner as we move forward. We have the power to actually bring everyone together, and we will use that power. Thank you.
Thank you very much, Mr. Denton. This concludes this online conference on trade finance. If I might just note that we were connecting people from Milan, Paris, both sides of the harbor of Hong Kong, which is a big feat these days. You might notice that a lot of our speakers and panelists had art behind them. I do too. And I think this suggests subliminally that we should be thinking very creatively and innovatively about trade finance going forward. So thank you very much to all our speakers and to the organizations involved, particularly our co-organizer, the ICC, A video of this event will be available in very short order. And please, speaking for the Asia Global Institute, please follow us on LinkedIn, Facebook, Twitter, YouTube. And finally, best wishes for the Year of the Tiger. Gong Xi Fa Chai, Gong Hei Fa Choi. Goodbye.